All right, let's break down how a pro trader looks at a market. We're going to go step by step, from seeing the big picture all the way down to the exact moment of execution. This is the thought process, live and in action.
You know, when you first look at the charts, it can feel like total chaos, right? Just a bunch of noise. But for a professional, there's a process, a way to cut through all that and find clarity. So how do they do it? Well, that's what we're here to unpack. First things first, before you even think about making a move, you have to know where you are. Think of it like a pilot doing a pre-flight check. You got to assess the environment, understand what forces are pushing and pulling on the market right now.
So, to make this real, let's look at a price. We're watching NASDAQ futures, and the price is sitting right here at 26,750.75. Now, that number by itself doesn't mean much. What's important is where it's sitting. And right now, it's in what you might call a delicate balance zone.
So what do we mean by trapped? Imagine the price is in a room. The floor, down at 26,710, is a massive support level, a place where a ton of trading has happened. And the ceiling? That's a key trend line, the 100 EMA, acting as heavy resistance. So the price is literally just bouncing between this floor and this ceiling.
Okay, so we get the environment. Now we need a clue, a signal that tells us which way the market is most likely to break out of this room. This is where we shift from just observing to actively analyzing.
And that clue is going to come from something called an EMA, an exponential moving average. All you need to know is that it's a trend line that pays more attention to what's happening right now. It's a fantastic tool for gauging the market's current momentum.
And we're not just looking at one, we're actually comparing two of them. The 21 EMA, think of it like a speedboat. It's fast, it reacts to every little price change, and it tells us about short-term momentum. Then you have the 100 EMA. That's more like a giant oil tanker. It's slow, steady, and it shows us the bigger underlying trend. The real magic happens when you see how these two are interacting.
And on our 1-minute chart, that interaction is giving us a really clear signal. And yeah, it has a pretty dramatic name. It's called a death cross.
So what does this mean? It's simple. Our speedboat, the fast short-term momentum, has just crossed below the slow-moving oil tanker. That's a huge tell. It means the short-term energy has turned decisively negative. The downward pressure is starting to win, and this death cross, this is our signal.
All right, we have our market context, and we have our signal. Now it's time to build the plan. This is where we turn that bearish signal into an actual trade, with exact numbers for our entry, our targets, and our escape hatch.
And here is that entire plan laid out. The setup is a 100 EMA rejection. Basically, we expect the price to rally up to that ceiling we talked about and then get rejected. So our entry is right there at the ceiling, 26,785. We've got two targets. First, the floor at 26,710, and if we break that, the pre-market low. And this is so important. Our stop loss is at 26,815, safely above that resistance, protecting us in case we're wrong.
Now, a plan is great, but is the trade actually worth taking? Let's look at the math. For every 3 contracts, the potential risk here is about $180, but the potential reward, a whopping $780.
That gives us a risk-to-reward ratio of more than 4 to 1. You see that? That imbalance, that asymmetry, is what makes this a high-conviction trade. The potential upside just blows the potential downside out of the water.
So we've got the context, we've got the signal, and we have a plan with fantastic odds. We are ready to go, right? Well, this last part, the execution, is everything. And it's often the hardest part.
This is the moment of truth, isn't it? Everything is lined up perfectly. Your finger is on the mouse. So, do you click it? Do you enter the trade right now?
No. The single most important action you can take at this very moment is nothing. You wait.
The whole strategy we just walked through is really built on this simple 2-step protocol. Step 1, monitor for the signal. We did that. We found our death cross. But step 2 is the one that takes real discipline. Wait for the market to stabilize.
And this isn't some vague idea of waiting to see what happens. No, it's a hard and fast rule. The analysis is crystal clear. You do not execute any trades for the first 15 minutes after the market opens, period.
So why wait? Because those first 15 minutes are just pure chaos. It's what traders call the washout period. This mandatory pause acts like a filter. It lets all that initial wildness settle down, and it makes sure our death cross signal is real and stable, not just a random blip in the noise.
And that really leaves us with the big takeaway here. What's more important?
finding that perfect signal, or having the ironclad discipline to execute your plan flawlessly. The truth is, a great signal is useless if you don't have the patience to wait for the perfect moment to act on it.